While everyone was arguing over the noise coming out of Washington, something happened quietly on the XRP chart that I have been waiting weeks to see. And if you missed it, and most people did, this video is going to catch you up very fast. Because what I'm looking at right now is not just another technical setup. It is the convergence of two things happening at the same time. A precise candle pattern on the daily that has a demonstrated 75% win rate over the next 3 candles, and a political timeline in Washington that is about to resolve in a way almost nobody is explaining correctly to retail investors. I'm going to lay both of those out for you today, the chart, the math, and the macro. So by the time you finish this video, you'll understand exactly what you're looking at and exactly what to watch for. Welcome back. This channel exists for one reason: calm, structured analysis when the market is anything but calm. No hype, no panic, no moon boy territory. Today we are decoding a specific technical formation on XRP and connecting it to a very specific political catalyst window. I will show you the data. You decide what to do with it. Let me start with the hard truth. Most retail investors look at a chart and see a price. They look at a green candle and feel good. They look at a red candle and feel bad. That's not analysis. That is an emotional reaction dressed up as investing. And it is exactly that emotional reaction that keeps retail on the wrong side of the trade over and over again. What I'm going to teach you today is a pattern I call the Stockmo Trio. 3 candles. That's it. And once you understand what this pattern is actually measuring, you won't look at a chart the same way again. Here's the mechanic. You get a massive green candle, an impulsive move, volume-backed, breaking structure. Then you get a pullback candle, red, controlled. This is not a reversal. This is the market catching its breath. And then comes candle 3. If that third candle closes above the body of candle 1, you have confirmation. You have a completed Stockmo Trio. Why does this work? Because that third candle closing above the first candle's body tells you 2 things. 1. The pullback was not distribution. It was accumulation in disguise. The weak hands that panic sold into the red candle handed their position to someone with deeper pockets and a longer time horizon. 2. The structure of higher highs is being defended. The buyers are showing up with conviction at the level that matters. Now, here's the data point you need to write down. When this pattern completes on a daily candle, price has closed above that first green candle's high within the following 3 candles, approximately 75% of the time. That is not a gut feeling. That is back-tested structure. And right now, on the XRP daily chart, we are sitting inside the formation window. The third candle is building. If this candle closes above $1.55 today, the trio is confirmed. And at that point, the next 3 daily candles become your window. I am watching this setup the way a surgeon watches a vital sign, with complete focus and zero emotion. Let's do the math, because the math is where this gets very interesting very fast. XRP has a fixed supply of 100 billion tokens. Circulating supply right now sits around 57 billion. Of the tokens held on exchanges, the ones actually available for spot trading, we are looking at a multi-year low in exchange reserves. That data comes directly from CryptoQuant's on-chain reserve tracking. The tokens are leaving exchanges. They are not coming back at these prices. Now think about what that means in the context of this price setup. If the Stockmo Trio confirms at $1.55 and we see a 3-candle continuation push, the first target I am watching is $1.67. That's not a random number. That is the 61.8% Fibonacci retracement of the full range from the 2021 high to the 2022 low, plotted on the weekly. It is also the level where the weekly RSI historically encountered resistance during the last 2 bull cycles before consolidating and continuing. The structure points to $1.67 as a very natural target for the next move. Here's the bigger math. Cross-border payment flows globally move approximately $150 trillion annually. That's the market XRP was architecturally designed to serve. The Nostro Vostro system currently has roughly $27 trillion locked in pre-funded accounts sitting idle. Capital that earns nothing while it waits to be used for settlements. XRP as a bridge asset does not require that pre-funded float. It settles in 3 to 5 seconds. The capital is freed. Now, if XRP captures even a fraction of 1% of that $27 trillion in trapped liquidity, run that math yourself. The current market cap becomes trivially small by comparison. I'll say it plainly. This isn't speculation. It is a design requirement. The asset has to be priced at a level where it can actually serve the function it was built for. You cannot move institutional-grade settlement volume through a $1.50 asset without creating catastrophic price impact. The math requires a higher price. That is not a prediction. That is physics and finance operating in the same direction. Now let's talk about what the smart money is actually doing, because this is where the retail narrative and the institutional reality completely diverge. Retail right now is locked onto the drama in Washington, the government shutdown headlines, the fighting over the SAVE Act, the Clarity Act, the Budget Continuing Resolution. They see gridlock and they interpret it as nothing happening. But here is what the institutions see. They see a negotiation moving toward its inevitable conclusion. And they are positioning before the resolution, not after. Ask yourself this: does a firm like Franklin Templeton, which now holds XRP in its blockchain-based money market fund, move without absolute legal certainty? Does BlackRock, which has already moved into Bitcoin ETF infrastructure, build out digital asset custody without a clear read on where the regulatory framework is heading? These are not impulsive actors. They do not guess. They receive legal opinions. They hold meetings with regulators. They know the direction before the headline is written. What we are seeing in the on-chain data confirms this. Exchange reserves declining, long-term holder supply increasing, OTC desk volume, which does not show up in spot exchange charts, quietly elevated. The institutional accumulation phase does not look like a news event. It looks like silence. Meanwhile, Ripple itself has continued expanding its infrastructure. The acquisition of Hidden Road, a prime brokerage firm, is not a vanity purchase. Prime brokerage is the plumbing that institutions use to access leverage, execute large positions, and manage risk across asset classes. Ripple is not building a product for retail. They are building rails for the entities that move sovereign-scale capital. That tells you everything about where the company believes this asset is going. Here is what I'm watching for the next 60 days, and I want to be specific because specificity is what separates analysis from noise. Washington is headed toward a grand bargain. The current continuing resolution standoff does not resolve with a clean budget. It resolves with a negotiated package. What I expect to include a slimmed-down version of the Digital Asset Clarity Act and some form of voter verification legislation. Neither side gets everything they want. Both sides claim victory. That is how a grand bargain works. My probability read on this: roughly 65% chance the Clarity Act passes in a skinny form, meaning it provides XRP and similar assets with sufficient regulatory classification to unlock institutional product development. But it does not deliver the full comprehensive framework the industry wants. That partial clarity is still a catalyst. That still removes the primary legal overhang that has kept the largest pools of capital on the sideline. My timeline: April. I believe a package moves through Congress in April. If the government shutdown extends, if TSA staffing becomes a public-facing crisis, the political pressure to resolve everything in one package becomes overwhelming. Politicians respond to pressure. The airports are the pressure point. Watch the airports. Once that resolution hits, the capital that has been waiting at the gate does not trickle in, it floods in. The window to be positioned before that moment is the window you are sitting inside right now. Let me be direct about what I see in the supply picture. Exchange reserves for XRP are at levels we have not seen since before the SEC lawsuit was filed in late 2020. That lawsuit created a period of suppression, a multi-year lid on institutional participation in the U.S. market. That lid is coming off, and when it does, the available float for spot buying does not expand to meet demand. The tokens that left exchanges did not go to sellers, they went to holders. Long-term holders, patient capital. The door is not closed yet, but I want you to understand with clarity the setup that typically precedes a major move, declining exchange reserves, technical pattern confirmation, approaching regulatory catalyst, institutional positioning, all of those conditions are aligning simultaneously right now. That does not happen often. When it does, the people who are patient and positioned are the ones who look back and say they understood what was happening before it happened. The question is not whether this asset has a future. The infrastructure, the adoption, the regulatory trajectory, and the on-chain data all point in the same direction. The question is only whether you're paying attention at the right moment. Here is what you need to watch for. If today's daily candle on XRP closes above $1.55, the stock mode trio is confirmed. Your window for the next 3 candles begins. Target I am watching, $1.67. Beyond that, $2 becomes the conversation, but only after $1.67 is taken out and defended as support on a weekly close. If the candle closes red and comes back below the 50-period moving average on the daily, the setup is off. I'll be patient. The pattern does not penalize you for waiting. It rewards you for not chasing. Macro Catalyst, April. Grand Bargain in Washington. Skinny Clarity Act. And if you are the kind of person who made it to the end of a video like this, who actually wanted the structure, the data, and the reasoning instead of just a price target, then you already understand more about what is happening in this market than the majority of people participating in it. That is not flattery. That is just the reality of who puts in the time. Comment trio below if you see the setup the same way I do. Subscribe if you want the next analysis before the next move. Stay patient. Stay rational. The math doesn't lie. And right now, the math is talking.